Hello traders, welcome to another crypto market update. We're going to be discussing some news stories today, mainly talking about the hash rate dropping. It dropped quite significantly, and that's going to be the main news story that we're going to be going over today in our first section of the video. But first, I just want to say, if you do enjoy these, if you're gaining some value, if you're gaining some education, if you think these are entertaining whatsoever, we would really greatly appreciate if you could subscribe to our YouTube channel. And like everyone says, turn on notifications, but that would be a great help. So we get our news topics mainly from our news section within our Discord. There's a Panda bot that automatically posts any relevant news topics regarding cryptocurrencies within our channel. So I'm basically getting all the news stories that I get every single day for the crypto market update through our Discord. So let's cover the main topic for the news that we're going to be going over today. Bitcoin's hash rate drops almost 45% since 2020 peak. And we'll talk about it a little bit more in depth here. We have a couple of news stories, and then we'll go over this chart on the actual website. So the Bitcoin or BTC network hash rate has just taken a steep plummet and is now down almost 45% from its peak in 2020. And it's calculated in quintillion hash rates per second, or hash rates per second, I'm going to say. So the site reported a 2020 peak of roughly 150 hashes per second on March 5th. Today, down 105.6 hashes per second, a 29% decrease, or it's quintillion, but to put it short. And then hash rate and difficulty. So here's where we get into kind of the correlation between hash rate and the miners and the profitability of miners. And there is a cycle that occurs within the miners and their ability to make money. So we're going to try to explain that in an easy to understand way within this video. We have two ways of explaining it in two different blog posts. So hash rate and difficulty. So a hash rate of a cryptocurrency is a parameter that gives a measure of the number of calculations that a given network can perform each second. So a higher hash rate means a greater competition among miners to validate new blocks. It also increases the number of resources needed to perform a 51% attack, making the network more secure. After a volatile month in which Bitcoin saw dramatic, if short-lived, losses of as high as 60% to around 3,600 in mid-March, the network's difficulty yesterday decreased by close to 16%. That's a substantial amount. So let's now talk about difficulty. What is difficulty in regards to the hash rate? It says right here, difficulty, or how challenging it is to computationally solve and validate, or difficulty, or how challenging it is computationally to solve and validate blocks on the blockchain, is set to adjust every 2016 blocks, or 2 weeks, in order to maintain a consistent 10-minute block verification time. This has close connections to the network's hash rate. Typically, when networks see a low level of participating mining power, the difficulty will tumble, while in periods of intense network participation, it rises, working as a counterbalance mechanism. So it makes sense, right? So the protocol wants that block every 10 minutes. If there's a lot of people mining, if there's a lot of people trying to mine, make money from it, there's going to be a higher amount, more people trying to complete that problem, solve that problem. And then it needs a more challenging problem, so it takes longer for the computers to try to solve it. Whereas vice versa, if there is a significant decrease in the amount of people that are trying to solve that puzzle or solve that problem, well then it's going to have to be easier because there's less people trying to solve that problem. So it's going to take longer for it to actually get the problem solved, so then they can get the block reward. So it's creating a fine balance, and we can see it adjusts every 2016 blocks in order to maintain a consistent 10-minute block verification time. So how this relates to trading opportunities, and this is where we're getting into it right now. As reported yesterday, the last downturn adjustment in difficulty was on February 25th. This is talking about the difficulty of actually mining, or the hash rate decreasing, because that's what makes it less difficult. Is if there's if there's a lower hash rate, there's less people trying to mine, which makes it easier. So as reported yesterday, the last downturn adjustment in difficulty was from February 25th of this year, when the coin's price was around 9,900. This was when we had that large symmetrical triangle or descending triangle that we had mid-2019, 25th of... When was this? February 2019. Well, look at that. Just 3 days later, it dropped around 8,800 in March 20th. And by March 14th, it to nearly 4,800, as low as 36 exchanges, as noted above. So it was recent. Wow. Okay, so let's look recently at this when we get into it. February 25th, because I know that there was one in November of 2018 as well-ish, before the symmetrical triangle. So it is somewhat relevant in terms of the larger time frames, and we'll go over the correlations a little bit later. But there are multiple times when there has been a drop in hash rate and then soon after a drop in the price of BTC. So interpreting the data. I don't know if that's spelled right. The relationship between price, hash rate, and difficulty has historically generated a trend that some analysts refer to as miner's capitulation cycle. The theory holds that while Bitcoin's price remains high and mining is profitable, both hash rate and difficulty inch upwards until they reach a threshold at which miners are squeezed and forced to liquidate more and more of their holdings to cover their expenses, leading to an increased supply of Bitcoin in the market. Hopefully that makes sense. To me, that totally makes sense. I was not doing as much on-chain analysis in previous months, but as time goes on, as I learn to use the on-chain analysis within my overall approach to trading, I do feel that combining the two is very, very important. Because to me, that totally makes sense. And this is the other side of trading as well. So you're not just looking at price action, volume, and all that, but you're understanding the market as a whole, understanding the different sectors within the market, the different niches that each participant plays within the network, within the community, within the sector. And it's you got to do your 360 analysis. You got to look at every sector and understand how the health is, how the situation is, because right now we're looking at the hash rate and it's dropping. And from what we read, from the story that we can create in our minds through the data that we have, we could have a high probability situation as for a potential strong short that we're going to be seeing here. So let's continue on here. We already did that then. So the capitulation point at which some can no longer afford to keep mining altogether then involves a decline in hash rate reflecting lower participation and can be seen today and is subsequent reset in the network's difficulty. So to me, this is very cyclical. It's going to be a cycle that is going to continue on and on. It's like credit in an economy. You're going to have recessions and ups and downs because of credit. When you are giving yourself credit, you are taking future opportunity away from you and giving it to yourself now, because in the future you have to pay it back at some point. So there's going to be ups and downs in an economy, in the markets, right? Similar to the cryptocurrency market, we can see that because of this minor capitulation cycle where the initial hash rate is pretty easy, there's more miners that come on, and it makes it more difficult to attain Bitcoin and to mine because the hash rate is increased and there's more and more people trying to get that BTC reward every 10 minutes, right? Because that's what the algorithm is set to do. It's not going to give a reward more than every 10 minutes. So if there is from 10 people to now 100 people trying to get that one reward every 10 minutes, it's going to be a lot more challenging. And with that, it's going to be basically whoever has the highest profit margins in terms of the lowest cost to operate and all that will be able to withstand through thick and thin, because if the market price does drop, for the people who do have a high amount of cost to actually operate, they're going to have to just basically go out of business because they can't make money because their operational costs is higher than the cost to be able to sell the Bitcoin. And that's where you see the cascading selling event, because you see these people, I don't know, for example, it costs them $8,000 per Bitcoin to mine. For example, if BTC drops below that, they're losing money. So at a certain point, there's going to be a particular area where miners are going to say, this is how much it costs us to mine Bitcoin. If it goes below that, it doesn't make sense to keep on mining, or it doesn't even make sense to hold it, because we're holding a depreciating asset when we've worked for it and spent money to make it. So we're going to sell at this area, and it does seem like this area, wherever it is somewhat similar with a lot of miners. So then what's left is the best, most efficient, the lowest cost, the highest producing miners are going to be the ones left that are going to be standing. And that's what true, in my opinion, capitalism is. They're not bailing other people out. You're not bailing. If your company is solid and strong, you're going to keep on going. If your company is costing too much to run, it is not being as efficient as it can, it's not going to be able to function, and it's not going to be able to continue as a business. So this promotes highly efficient businesses from mining, and then kind of takes out the noise every once in a while through this miner capitulation cycle, when there's going to be too much of an increase in miners, that there has to be a little bit of a sweep. Just like in the price of Bitcoin, there has to be a bear market to shake out the weak hands. There's an over-exaggeration to the upside, same as the miners. So there's going to be two different cycles, both macro and micro, I'm sure, for both the on-chain and the technical analysis. So definitely very important in that regard. Now we're going to go into the actual chart here. So this is, I believe, the 2-year chart here. We have the 1 year, we have the 2 year. We can see the different hash rates here. And we can see recently we got a massive drop. And this is that previous drop we saw last time on November here, that massive drop to the downside. That is when we saw this drop right here. So let's get this like so. So what do we see? This is like a large time frame, so it's really easy to understand. So let's look at this drop right here. This was November 18th, 2019. All right, so then if we look on November right around here, 19th. So this drop right here, there was a pretty sharp drop, and I think that was it, 11th. It's not that big of a drop. So I think this was going to be this move right here. This significant drop from late October would have been that massive drop. And then this huge one from 10K, let's say, it was from, let's get our on-chain analysis. Let's say that was February, March of 2020. So let's look. Yeah, so it was around from the high February, March. So there is a correlation, and even looking back all the way from November 2018, we can see, let's zoom out on the 2 year and then bring this in a little bit more. So look at this, right? It is going to be reflecting what we see on the actual price action chart, where around the same time, around early November, you're seeing a drop in the hash and the hash rate, and you're seeing the same thing in the price action. And then you see similar stuff that's happening right now. You're seeing a drop in hash rate, you're seeing a drop in price action, and recently we saw a massive another drop in hash rate. So in my view, I think we could see another drop in the price as well. And this is going very well with our overall analysis that we've been having for a week, a little bit longer maybe. After the massive move to the downside, we were talking about another push to the downside, and we've been seeing a nice ascending wedge that's been appearing here. We've been taking a few stabs at it with no luck, but we're going to remain patient, and we're going to be able to try to capture that next move to the downside. Maybe it holds the 5K or the 42, but maybe it goes down further and makes a lower low. We don't know, but we're wanting to be on that train when it absolutely demolishes those supports and moves to the downside. One last thing we're going to discuss before we dive into the charts here is another article about the same topic, why today's 16% fall in BTC mining difficulty may cause the price to plunge. Both of these are found on the Discord news section, absolutely free to view for anyone who wants to be updated on the news. So let's read into it here. Bitcoin's mining difficulty today dropped 15.95%, the second largest decline in its history, and this was posted 18 hours ago. The last time a drawdown adjustment took place, the Bitcoin price plummeted more than 50%. Let's talk about Bitcoin's difficulty yet again, just to really understand it, because we don't go over this stuff every single day. And I do think that it is important, and for people who do watch this regularly, combining on-chain analysis with technical and I guess volume spread analysis, if you are looking at volume, creates more of a story, and understanding the different sections of the sector and their own cyclical cycles is very important. And this is just one of the cycles. Bitcoin's difficulty, let's get into it. Bitcoin's difficulty is designed to adjust every 2016 blocks, or approximately every 2 weeks. This adjustment is based on changes in the network's hash rate and occurs regularly in an attempt to ensure that the network continues to solve new blocks at a rate of 1 every 10 minutes. If the hash rate during the past 2 weeks have gone up, the difficulty will go up as well, making mining more challenging. If the hash rate has dropped, the difficulty level will decrease, making blocks easier to solve. So it makes sense, like we talked about in the previous video there, or the previous news section. So, like we said before, we've already talked about this. The drop in February 25th, 2020, the price was at almost 10K, and then 3 days later, it dropped to 87.85, and by March 14th, it retraced to 48.30. Bitcoin lost 52% of its value from the last downturn adjustment in the hash rate. So it seems like there is a correlation, and we have to respect that, in my personal opinion. So let's read a little bit more in depth about the miner capitulation cycle. We've already talked about it a little bit. So while this relationship could be a fluke, there is a rational behind this trend. Downward difficulty adjustment completes the so-called miner capitulation cycle. In short, let's say we are at a point where mining is highly profitable. This leads to more miners joining the network, increasing the hash rate. As a result, the difficulty adjusts upwards and the margins get a little thinner, but mining is still profitable, incentivizing more miners to join. This cycle continues until a relatively large portion of miners cannot keep up anymore. Their costs are too high. Some are forced to liquidate an ever-increasing percentage of their newly mined Bitcoin, right? That makes sense. They get rewarded in BTC, and they have to sell to pay off debts, to pay off, monthly payments and all that stuff. The world works in currencies, fiat currencies, not BTC just yet. So they have to sell their BTC in order to get fiat currency to then buy their equipment, to pay their electricity bills, or whatever the case may be. This causes an increased supply of Bitcoins for sale on the market, and at some point, they capitulate and stop mining. The hash rate decreases, and finally, the difficulty receives a downward reset. So it's going to be a reset, right? So it is kind of like, in terms of global macro, the massive reset, like this debt super cycle that we're seeing now. There's a long-term debt cycle and short-term debt cycle. There has to be a reset. There is patterns and cycles all around us, even looking at nature. Like, look at seasons, that's a cycle. Look at economics, look at markets, there's cycles in everything. Even in miners, there are cycles. It's human psychology, right? I find it super interesting, and I hope you do too. And I think this is going to kind of finalize and cement the idea of this cyclical cycle with a quote by Philip Salter, head of operations at Genesis Mining, which is a massive mining operation. It is no different from traditional markets. You have to sell everything to keep the operation going, to pay off your debts, As a miner, you have bills to pay. You have to pay for electricity, for operations, and all your expenses are in dollars. So as the price of Bitcoin is dropping, it means you have to sell more of your inventory just to keep going. To me, I really understand this theory, and I will incorporate the hash rate more into our analysis, because I haven't really been doing that too much, but I think with kind kind of the more insight that I've gathered from this. Like I didn't, to be honest, I didn't know too much about this, let's say a month ago. And then recently I've been really trying to get more into on-chain analysis, understanding really what drives the different parts of the cryptocurrency market. So, as I learn, I'll share with you more. I've been diving into hash rates and different on-chain analysis and number of addresses and wallets that are open as well, which is pretty interesting. But that is the news story. Hopefully you got something from it. I definitely did as well. For me, making these news stories is beneficial because A, it helps you guys and girls get an understanding of what's happening within the overall market, but B, it also helps me because me reading it, I have to understand it in order to actually explain it in a way that's digestible and understandable, so it helps me as well. So it's a mutually beneficial relationship we have, which is kind of a funny situation. So that is the news and the hash rate and the, I guess, on-chain confluence with what we are seeing within the charts. Because before we went into that, even before we talked about it on our channel or anything, we were already talking about how we were looking for shorts within our current market structure with a possible ascending wedge that could be breaking out shortly. So we'll talk about the price action now, but I think that the fundamental on-chain analysis built with in relationship to the price action will give us a really good opportunity when these major moves happen. Trying to find as much confluence with the trade that you can is really good for building a case for why you should be entering. And that's when, in my opinion, you could be aiming a little bit and going a little bit heavier compared to some other times because you have so much confluence coming together at one point. Doesn't mean that you shouldn't manage your risk. You should always manage risk. But at the end of the day, there are times when you could be a little bit heavier because you have a decent amount of confluence with whatever you're trying to trade. So in that sense, we'll talk about the weekly here. Let's get our snip and just discuss the weekly because the macro chart we did talk about already yesterday, but with what we talked about, we are still expecting a move to the downside with our ascending wedge right here. It's just a matter of if we're going to hold our supports or break down. So we got a minor level of support right around here. We see that it was a support back in start of, I guess, the spring of 2019. And that's where we're currently holding. We see the weekly and the daily basically closed right at that zone with a body candle closure like so, and a wick to the downside. So we do see that it's respected. It's just a matter of when we do dump back down, or I guess if we do dump back down, how far are we going to go? But I do think that's a good possible first take profit because we see this descending zone as well. Created zone of support. We see a horizontal zone, and also we see this ascending support that is being taken all the way from 2017. We see our first anchor point right here. We see our first touch point, second touch point, and then we see a candle closure right at that area. So we have a lot of confluence for our support right here. So I do think that we are going to trade this ascending wedge. We're going to be looking for a first take profit at that previous zone. I think we will have some exaggeration in terms of a wick to the downside. So having some OCO, one cancels other orders, as extensions in case there is a wick is a good idea in my opinion because you're able to capture some good solid take profits deep into the take profit levels. But at the end of the day, I do think that having some dynamic take profits is good as well because, that was a massive bearish push. And I think that with the fundamentals, with so much happening going on in terms of the markets, not just crypto, not just on-chain looking at hash rates, but like more global macro, more talking about what's happening in the stock market, what's happening in terms of the depreciation of basically all equities globally, and a lot of deflation in some currencies. Like Australian dollar, Canadian dollar is just getting wrecked. New Zealand dollar is just getting destroyed. US dollar is still very strong. So, a lot of people are seeing the turmoil. Even if you're holding cash, right, it's still going to hit you. So, I still think that people are going to be in more pain before they turn to Bitcoin. So I think we will have another dump. It's just a matter of if we're going to hold that support and continue this large time frame triangle, or if we're going to break the zone and then we have to reassess. This resistance, I think, is still a valid zone that we will be using, but it's just a matter of if we're going to hold that ascending support or not. But that's the larger term time frame. We obviously have a lot of time before we get to that zone, and a drop of a 20-30% move. So even if it's just to that support, we're looking at a great opportunity. All right, this is the CME futures. No real gap or anything, but we'll talk about this on the daily a little bit more in depth. But the CME futures does show it pretty well as well. 4-hour chart anchor point, not really perfect because the wick protrudes out of the zone, but we see it perfect. Type A, Type B, and then we see basically touching right now, and we see a horizontal zone of resistance. So now we're just squeezing, right? This is the apex of the pattern right here. The price has to make a choice either to move to the upside or downside. We know that there's a zone of confluence with their red descending zone right here. It's not perfectly touching, but we know that there's sellers here. There's a lot of sellers here. We know that for a fact, right? Because we see A resistance, B descending zone, support resistance. We can assume that that doesn't mean that it's going to hold guaranteed, but we know that there's sellers in that area. So now what are we going to do? Well, high probability situation for an entry is we have to wait for the price to break the price action, which is an ascending triangle, which would then probably be a break of the lower low, break of the support there, and we're looking for a lower high to complete the move to a pullback, and then we're looking for a next extension to the downside, because like in all markets, we see moves to the downside which are pushes, we see exhaustions which are pullbacks, and then we see impulse pushes that are breaking zones, and then we see pullbacks, pushes, pullbacks, and pushes. So we're looking to enter on these pullbacks here. We're not looking to enter at the completion of the push like here. Sometimes that happens. Obviously, we're not wanting to do it, but ideally in an ideal situation, we're looking to enter on the completion of the exhaustion, or you could be looking at the break of key zones. You sometimes could be looking for a pullback, but it might be small, but either you're looking for pullbacks or you're looking for at the break of the zone. So in this case, we're looking for the break of the zone, because that's going to be our market structure break. We're looking for break not only horizontally with this, but we're also looking to break this ascending zone, and then we're looking for a lower high to form, creating market structure lower low, lower high formation, which is bearish, and hopefully that is going to be the last high. I'm going to put my stop loss here because I've been stopped out with some shitty tiny little wicks to the upside, just getting me out, and I really don't like that, and I'm going to give that price a little bit of room because we're in a very volatile but also noisy situation. Like, look how much the price is moving within this little range here. That's, yes, in a range, but we're seeing a lot of wicks to the upside and downside, and I tried getting an entry here to the downside, but it took me out, so I'm just not going to enter until it's giving me more confirmation. Also on the daily, nothing super interesting on there, and also this is the other daily that we're going to be looking at. And I think this presents the price action a little bit more clearly in my view. Alright, so we got, in my view, we have this zone that we're going to be holding, and we have potentially this level of support. So we're creating a funnel, and then we got this mid-range zone, which is kind of right in the middle of the funnel, which is going to be acting both as a support and resistance. That's kind of how I'm going to be viewing the market. And then at a certain point, we will exit the funnel, and that will be pretty bullish in my view. That once we exit that funnel, it'll be pretty bullish. Kind of like how we exited that descending triangle or descending channel right here, and then we made a move to the upside. There was some pretty good gains to be made from that push, and I think it's going to be similar to this push when we do inevitably see it. But right now, we're still going to the downside, in my opinion. We're still making moves down, and we tested this place once, now we're testing it again. We've seen it as a support in the past, and we see this nice little wedge here, and we're expecting it to come back down, basically. That's going to be the trade. We've been talking about it for a while, and nothing has changed, so our bias has not changed. Now let's talk about the 4-hour, getting a little bit more into the granular details here. We're seeing a lot of hesitation at the 68-ish $100 level of resistance. A ton. This is the 4-hour chart, and look how long we've been holding this. We've been holding this since the 23rd. So we've been holding this for 3 days. This very, very tight consolidation right there. Basically, since the 23rd, we can see we've been holding this. The 23rd, we got a jump in price because of the Fed basically saying unlimited QE right here. And since then, we've been in a very, very tight consolidation, not really tradable to some degree unless you're like scalping really, really small time frames. But you're not really seeing any opportunities here. But on the larger time frame, we see some great opportunities for potential shorts because we see a resistance here initially. And this was a resistance in previous historic price action, as we know, because we've talked about it already. We can also see that this trend line right here has broken. Let's actually just draw it fully in instead of dotting it because it just is easier to see. And also we'll take this off. And then we'll just talk about this trend line right here. So this is the trend line we initially wanted to short once it broke. We did short, and we took an L. That's fine. This wick basically told me that I don't want to be in this trade anymore, and it took me out. So now we're seeing it come back and test this resistance yet again. But now, like in my eyes, we're almost seeing this, where this is the wedge, right? Easy to understand. Break, coming back up, and testing the previous support as a new level of resistance. That's how it looks to me right now. And it also hit the resistance that we've already tested multiple times, like so. So this is a major, major level of resistance for me, right around here. But, you know, we're seeing these wicks to the upside, wick to the upside. So I don't want to enter just yet. I know that this is a strong level of resistance because the 4-hour is showing me a lot of indications that there's going to be a lot of resistance there. But I don't want to just enter randomly because we could have a blow off top and then a slam back down. And I'm going to get fucking taken out right there. And then it's going to move to the downside. So I'm going to wait. Because we're making a move to the upside, I think, you know, the whales, the manipulators, whatever, could have a blow off top breaking this zone. So then all the FOMOs, all the bullish people are going to be like, oh my God, we're going to go for an epic bull run because we've broken this strong zone. People are going to be buying into the sellers of the manipulators who actually want to be shorting it, blow off top, and once we break this ascending zone we see right here, that is for me going to be the signal that I want to be shorting the market. We see an anchor point right here. We see our first touch point, second touch point, third touch point. 4 in total, making it a dependable zone, so I can use it. So that's going to be my overall trade plan. If it just breaks to the downside, and if it's able to hold this resistance, well, then I'll be looking for shorts. I don't think that there's going to be a blow off top from the whales trying to basically manipulate the price, so then they get a better entry, and they're not absolutely plummeting the price when they are entering, because as a short you need to sell, and if you have a large amount of capital behind you, you're going to impact the price. So then if you are able to push the price a little bit up, so then it pops over this, you get a bunch of people buying your sells, and then it's not going to impact the prices as much. So, you know, very easily manipulatable if you have large amount of funds. If you're a hedge fund in the tens or hundreds of millions, you could 100% do that. Tens of millions, you could leverage. Hundreds of millions, you don't even fucking need leverage at that point, in my personal opinion. You could do that and then slam it back down, but we're going to be looking for both options, and that's why we're not just looking for shorts right away. We're looking for confirmation of a break in either this zone or a blow off top, and then still looking for that confirmation of the break in the ascending support. So we'll see how it plays out, but regardless of which way it's going to go in the short term, we're going to be looking for shorts here. We're really, really thinking that it's going to come back down to around maybe 5K, sub 5K. At least maybe 47, 48, but I think that's going to be the first solid take profit zone in my personal view. So we'll see how it goes. That is combining macro somewhat micro in terms of the hour chart and the 4 hour, and then the hash rate, and then also the understanding of the global macro picture and kind of the liquidation events that are occurring in the fear and index, and looking at a bunch of stuff. So I don't really want to dive into the 1 hour too much. This is actually the 15-minute. Let's go back to the 1 hour. So let's just talk about the 1 hour right now, because just making sure I have everything where I should be. Okay. In terms of trend lines and whatnot, not really anything else. So we got our ascending zones. That was a really poorly drawn zone. This is our resistance right here. And then we got our major support that we want to be holding right here. We were squeezing. This is a high, lower high, lower high. So we were squeezing down, and it looks like we are going to get a pop-up, maybe testing the $6,800 zone again. Wouldn't be surprising if that is the case. So it came back here, and then we're kind of consolidating a little bit further down. And then we're looking for that crack, right? And then we're going to get a pullback, possibly validating this support as a new level of resistance. We don't exactly know, but we're looking for, like always, price action, which is our ascending zone, market structure, making lower highs and lower lows, and volume. So we'll see how it goes. We're not going to be entering long or short until we talked about we're going to blow off top or pull back, or we're going to consolidate and then move to the downside. But at the end of the day, we're really looking mainly just for shorts, for trades to take. Going to get a little bit of coffee and then continue on. All right, so next thing we're going to be going into is the supply and demand here on the Bitfinex exchange. So this is the blue, sorry, not the blue, the charts that are green and red right here. This is going to be the amount of longs that are opened on margin on the Bitfinex exchange. And this is going to be vice versa shorts. Bitfinex exchange, margin trades, short. And just looking at where the resistance is right here, it looked like the sellers were able to push up above the zone. It did make a significant higher high, and this could be the higher low. We have to consider that. But it's coming back into the range, as we can see right here, which is interesting because obviously we're still, in my opinion, in a bearish momentum move, but we had a massive pullback. So I think the short sellers are kind of worried because of this big pullback that we've had. And, you know, from the low, we've gone up like 80% or something, which is pretty crazy. But I think the next move to the downside will come again, and then we'll get a sharp spike back in the shorts, and then the buyers will come back into the trading range that we're currently kind of around here. So I think we're going to be playing around here for the buyers, and the sellers are going to come back up here, and then we might be in this range here. That was very, very messy, but I hope you understand. I think the sellers are going to come back and be in, fucking hell, I need straight lines for this, be in this range, kind of like here, back what we saw right here. And then for the buyers, we were in the opposite range, so we were from here to here, whereas the sellers were from here to here. So I think the sellers could come higher, and the sellers could stick where they are or come a little bit lower. Hopefully I explained that well, right? We go through this every single day, so I may be over-explaining it for people who are maybe just starting. Go through my other videos if you don't know how this works. We go through it every single day, and I can't explain exactly how every instrument works if we go through it every single day, but hopefully over time you're able to understand what all the instruments we use and how we use them to kind of integrate each other and integrate each tool, I guess, in a way to create our story. All right, so that is BTC. Hopefully you understand my perspective. Let's just quickly look at the comments real quick. Hello, Sam. And then not going to look on TikTok comments just yet. Going to get a little bit of drink of water, and then we will start on the alts. But basically, we're looking for the same thing for the alts that we were talking about yesterday. There's basically zero movement on almost all these alts that we're currently looking at. Ethereum is a possible short. We got a very strong level of support at around 129. Actually, we could probably pull this up a little bit higher and blow it up kind of like that. I'm very happy with that zone. I don't know why it was a little bit lower, but that's the zone I'm going to be working with instead of the other one. And then we got another ascending zone here, so we're creating a squeeze. A lot of these alts do look good for a short, but at the end of the day, I'm waiting for confirmation. I'm waiting for momentum to the downside, and then I'm going to be looking for shorts, basically. Because there's still a chance that we could come up here and test this zone. Who knows, right? I don't, because it could come up here again. Like, I don't know that, right? And on the small time frames, that could be a solid move, but on the large time frames, that could just leave a wick, and it could leave a nasty push back down and then leave any longs in the dust. So I'll just happily wait until the larger move comes, and I don't care about the tiny little moves that are happening right now. It's something I'm going to completely disregard until we see the 4 hour and the hour start to really crack and show signs of weakness. But man, that's a tight consolidation. Jeez, hey? I think we could draw maybe another zone that's a little bit cleaner. Not really. I'm happy with that. Okay, so that is Ethereum. We'll stick on it on the hour chart because I'm pretty happy with where it currently is. Basically looking for failure, and once it breaks below the 133, 132 zone, that's when I'll be really looking for opportunities. And then once it breaks this ascending zone, then it'll kind of be a full force short, I think, to the downside, in my personal opinion, as long as it sticks below this descending zone. If it breaks above, then we'll have to reassess and look at BTC. But as of now, I'm pretty comfortable with how the structure of this current trade is looking. BNB is another opportunity in my personal opinion. Let's zoom out a little bit on the 4 hour here. And this is how basically every single alt that I'm looking at is viewing. So we see that there's an anchor point right here, and then we see our first touch, we see our second touch, we see a type C, and then we see our fourth touch making it a valid zone, and then we see a pullback validating it as a new level of resistance. So that trend line is now complete. It's validated as a resistance, but we're just not seeing any sellers, right? You see a push, you see a pullback, you're expecting a next leg down, but you're just getting so much hesitation. Like we've been holding, like we said, since the 23rd, completely sideways. So for me, like I tried entering short when we started to see some hesitation, when we saw the double confirmation from shorts, but it just kept on going. So at this point in time, I'm waiting for confirmation. I did draw a bit of a minor level right here where it's connecting a bit of the lower highs, and hopefully we maybe get something like this. I don't exactly know, but first level to take profit probably going to be around the $9 or $10, $9.50-ish range. We'll see how it goes, but BNB is something I'm looking at for shorts, but like I said, with the other alts and BTC itself, I'm not really going to be wanting to enter anything unless it gives me a direction that I want to be trading. It's not right now, so I'm not going to. Link, exact same thing. Talked about this yesterday. Major support at $1.60, and I think the momentum could start when it breaks $2.20, and then we got a mid-range zone at around a $2 range, right around there. Not much more to talk about on Link. EOS, same thing. Ascending wedges, as you can see, not really close to the support zone, so I think this is going to be a little bit more of a lagging alt that we could see as a potential trade if we are not able to get an entry, if we're sleeping, if something happens and we're unable to catch it. This could be a lagging trade that could yield us some pretty good opportunities if we're late to the game, because it is later than some of the alts that we're seeing very close to our support zone. And then XRPs are ascending triangle, very, very simple price action pattern. We see an ascending zone. Once it breaks, we're going to be looking to enter a short opportunity, and we see a nice potential squeeze right here, although we're not going to count on that trend line. We're not going to look to long if it breaks. So that is basically the altcoin market. We talked about it yesterday, we talked about it today. We're basically doing the exact same thing as BTC, except altcoins will give us more volatility and maybe provide us with a better price action pattern than BTC. But you can basically bet that they're going to go in similar directions on the larger term time frames, and it's just a matter of which coin you can have the highest edge with or the most edge with. Basically, that's what you're going to be wanting to look out for. So thank you very much, everyone, for watching. That was a crypto market update. We will be doing a global macro update in a little bit. I will refine this one, do the timestamps, and then post it on YouTube as well as our Discord. For those who found this interesting, who found this educational, informational, and who found it somewhat useful to any degree, it'd be great, and we'd really appreciate if you could subscribe to our channel. It means a lot, and it helps greatly. So thank you very much for watching. Any comments on gold, Sam says? We'll talk about that in the global macro update. So I'll close off the YouTube live and then start up another one shortly. I'll keep the TikTok running, and I'll go over the TikTok questions in basically 30 seconds. So thank you for watching, everyone, and until next time, happy trading.